The stock market rally looks strong on the surface, but key signs say a reversal may be imminent. There's this guy that I've never heard of, but I finally heard of him yesterday, Tom DeMark. He apparently is a legendary market analyst, and he actually advises hedge fund managers. Now, I would have thought that hedge fund managers were good enough at what they do. Do they actually need someone to advise them? And apparently that's this guy. He warns that the S&P 500 is about to top out. It could drop more than 20% from its peak. Markets tend to top out on good news, and right now headlines are full of optimism, and that's the danger. And they're also saying that a lot of people are buying on these dips in hopes of gaining on the momentum upwards. But retail investors, they are the ones that are buying on these dips. But it's the hedge funds and institutional investors, the bigger investors, that are actually quietly selling in the background. So those of us who are, the retail guys who are starting to buy in, we're buying stocks while the institutional investors and the big hedge fund guys are actually selling. That's not a good sign. Underneath the rally, fewer and fewer stocks are actually holding up. The market breadth is actually weakening, according to the analyst. And the 200-day moving average, a long-term trend line, is in play. The market breaks below it and fails to bounce, panic selling could follow. And then you have the coupling of the student loan payments. That's back after a 3-year hiatus, pulling cash directly out of consumers' pockets. And consumer confidence is weakening. Spending is weakening, and Americans are now choosing to pay either between debt or buying essentials. And the housing market, as I've said before, is cooling. High mortgage rates are freezing out buyers, and prices are starting to fall dramatically in key regions. Car loan delinquencies are also rising fast, and especially among subprime borrowers as auto prices remain inflated. Together, these signals point out to more than just a market correction. They actually hint at a broader economic downturn that's gaining momentum. And if these cracks widen, the market rally could quickly turn into a sharp and painful slide. So I think there's a lot of bad things that are going on in the market. I think people are running out of money. I think that with the housing market and the auto market going down, that there's a lot of bad things happening. And we'll have to see with the stock market. It's hard to say what's going to happen. I'm curious to hear what you have to say. Do you think that the stock market is going to collapse as a result of institutional investors quietly selling and getting out of the market? Is this one of those things where people like you and I are buying into the market while everybody else that really knows what's going on is selling and leaving the rest of us high and dry? I'm curious to hear what you have to say. I certainly hope that doesn't happen again, because it happens all the time. But let me know in the comments section. If it's your first time here, be sure to subscribe. Click that like button. That helps the algorithm. Check out our links in the description. And I appreciate that you're watching. This is a channel that's been around a long time, but we're definitely trying to do what we can to get as much momentum back as possible. And we definitely appreciate you watching, and we'll see you in the next video. Thanks.